Hey guys, this is Andrew for TradingSenses.com. I've been working as a professional trader for the past 6 years in Hong Kong, and I've created my YouTube channel a few months ago. I want to show you guys in my videos all the different tools and techniques that we can use as pro traders to make money on the markets. So I mostly use technical analysis, which is a set of tools that allows you to predict the price action. So in today's video, I want to show you how to do it with Gamestop. Let's get into it. So this is Gamestop chart, guys. So I've just done a short-term analysis. I was showing you that on the hourly time frame, you had this kind of behavior that is very helpful when you are a day trader, that when you spot, for example, this moving average that is supporting the price perfectly, guys, this is the kind of stuff that is very precious when you work in trading. This is giving you very good signals because you can see that the reactions were perfect in the past. All right, so I'm not going to go through this again here. I want to take a step back, so I'm going to go on the longer time frame, the 4 hours. For example, I want to take a step back and try to make the different scenarios and see what is happening. All right, so the first thing that I see is that there is some bearish momentum on the short term. When you have a look at the news, GameStop overvalued and vulnerable to the digital threat. GameStop stock sinks as market gains. You have this kind of stuff. Do option traders know something about GameStop? We don't. I mean, the only thing that I see on the option market that is very animated is that the volatility is very high. So this only means you can see it like here, for example. So you go on Yahoo Finance, you type your maturity here, and you can see, for example, the 690 strike, which is the highest strike you can have on the 30th of April maturity. You have an implied volatility of 350. So it's very, very big. It's like around, 20% daily moves for the coming 2 weeks. So it's a lot, because of course you won't have every day GameStop moving by 20%. So it's an average. So it means that someday it can move by 50%. So this is what options traders are expecting. And usually it's associated with a bearish market. But here in this situation, let me explain you something that is called divergence. So if the market is shifting momentum, you always have this kind of signals, all right, that are showing you that the market is out of steam, that the bears are in control, on the longer time frame, because here bears are in control on the short time frame, but who is in control on the longer time frame? That's the question I'm having. And to answer this question, you can use very basic stuff, guys. So let's go on the daily time frame. It's kind of obvious here. You can use what we call divergence, all right? So a divergence is actually two opposite signals coming from the price action and a momentum indicator. So for example, the MACD. And what you want to see if there is no shift in the momentum is, for example, the price action going lower with the MACD going lower as well. All right, so there is no divergence. You want to see the price action going lower with the volumes going lower as well. And here, for example, this is exactly what we have. So if I go on the 4 hours time frame and analyze, for example, this move, so the volumes are not very clear here, but you can see like volumes going lower, price action going lower as well. I can start it here if you prefer. So no divergence, the MACD going lower, volumes going lower, price action going lower. This all makes sense. Here, the price action is going higher and the MACD is going higher as well. So the volumes are here, for example, not going higher. So here you had a divergence, all right? So you could have a divergence on the short term on the volumes, because you can see the volumes are going lower here and the price action is going higher, all right, just in this time. So this is a divergence, for example. So this is a good example to show you guys. So you didn't have the divergence on the MACD. The MACD was going higher, price action was going higher, but the volumes were going lower. So this is showing you that the market is out of steam, for example. And here we had this correction. So interesting to notice. Then if I take one more step back, so daily time frame, so we have same thing, guys. Now I'm analyzing the larger degree wave counting. So I take from this high to this high. So I don't need this one anymore. Price action going lower, volume going lower, MACD going lower. So no divergence on the bigger time frame. So this is telling me that we are still in the same momentum as we were when we arrived here, which is bullish. So of course, doesn't mean that on a short term, we won't see, for example, Gamestop going to 110. It just means that if we go to 110, there's going to be a lot of buyers because we are still in this bullish stance. That's why on the longer term, I am bullish. And as I showed you guys on the short term, I'm looking for some more bullish signals. We need to break this downward sloping trend line that is here. So now around 160, and then we have 175 to break as well. So all this area between 160, 180 is the area we want to see broken for the bullish momentum to really come back strongly in the game. And then finally, my counting would be good. I mean, I'm looking for the third wave and I don't have it. Here I have the first wave. Then here for me, have my second wave that is complete. So this should be a third wave. But guys, the third wave is always very impulsive, all right? And then 4 and 5. And this doesn't look to me like a third wave. During a third wave, the volume is increasing. This is the strongest wave with the more volume. So this doesn't look like a third wave because the volume is going lower. And for example, we are doing right now, if it's a third wave, we're doing a 1, 2. And we are looking for the third wave in the third wave. And once again, so here I had something good. So for example, like this. I had something good when we had the strong rebound with some more volumes, but then right away it got rejected. So something is telling me that this correction is not finished yet. And I'm wondering if actually the second wave was here or if the second wave is simply here. We could have here a WXY correction. So I showed you the second scenario, XY correction. And then this is only the 1, 2. So then it would make more sense with the third wave that needs to be more impulsive. And then we're going to have the third wave. And then 4 and 5. The fifth wave, guys, I remind you, goes to 800. Okay, something like this. So this would make for me more sense. But for this to be true, the correction needs to be deeper. So we need to go, sometimes it's good to correcting more. It's good to go for these buyers that are waiting at lower levels. You guys maybe want to buy the dip and you won't buy it at 150 or 120. You will, for example, wait to 110, This is, for example, what I would do if I need to buy the dip on Gamestop. I wouldn't buy it above 110. So maybe, the price action needs to go lower for the bullish momentum to really, really come back strongly and to have this third wave. So this is something I'm looking for. But once again, so this is the bearish case because once again, I'm bullish on the long term. If this changes, guys, I would let you know. I would try to spot if I see some divergences or anything that shows me that, the price action might actually really, really go lower. For example, another indicator is to look at this volatility. As long as we have a very high volatility on Gamestop, especially on those very out of the money strikes, it means that the market is very animated, that there are a lot of buyers, and it means that we're still in this bullish development. The signal on the option market would be given for me by a volatility that gets really hammered, this implied volatility. So this is something you guys can check. So for example, checking the 30th of April, is too short to actually have good information. You can go on July, it's more stable, and you check for example, 800 strike, so here it's at 190%, and you keep an eye on this. If this, for example, goes to 150%, like a 50% drop in the implied volatility of this July 800 call strike, this would mean that you know, option traders don't believe actually it would go that high. It shows a lot of information on the option market. It means that they don't need that much protection to sell those call options to retail. So it's something that I keep an eye on as well, because I'm an option trader and I know that this is, you know, usually some early signals that you can have in the market. And just to conclude, I want to show you guys, all right, so this is my bearish case and my bullish case is still on the table. So I told you it's like the 1, 2 is here. And this is actually a 3, 3, 4, 5. And in the third wave, here we are just doing a 1, 2 as well. All right. 3, 4, 5. And then now let me zoom in. So yeah, guys, this is Elliott wave counting. You know, it takes me a lot of time to prepare all these scenarios for you guys. But I like to do it. It's something I'm used to do. And by the way, if you guys want to know more about all the different rules that you need to apply when you use Elliott wave principle, so of course you can find it on the internet everywhere. You can read the book as well, which I did, written by Presto and Frost. But it's very tough to read. I come from a financial background. I'm, you know, very at ease with all this kind of things, and it was a struggle for me. So that's why I decided, guys, to make for you a training that you can have for free. Of course, everything is for free by clicking on the link in the description of this video, and you're going to receive the access to this video. So here, it's still possible. We are in this scenario, and this is a 1, 2, you know, 3, 4, 5. All right. So we would have something like this. So now I get rid of the biggest one. So you just see what is happening here. So this is something that could happen as well. And the third wave usually breaks out some very important levels. So for example, here, the 175. So this is on the table, but like I said, it's a bit weak for me to get the third wave suddenly that impulsive. So I'm expecting maybe some more correction so that we can go for some liquidity sitting at lower levels and, you know, using all this power to actually break out those levels very impulsively. That's what we need to have, guys. And once again, I showed you many times the big open interest. Let me show you again quickly on those strikes, upside strikes that you have on Gamestop. So you can see, guys, like the open interest that you have on this all high strikes on Gamestop. And for example, here, so I'm updating the stuff regularly, and you can see that, for example, on the 690 30th of April, you know, you have this 9,000 options. So it means the multiplier is 100. So it's around 1 million shares equivalent sitting at the strike. So of course, for now, the delta is 0, but I showed you guys this many times. If we go to say 500, this delta is only 16% because the maturity is very short. But if we go to 800, then this delta is 75%. So it means that the option traders need to buy 1 million shares to hedge the books. So this is what is the gamma on options. And this is creating a lot of bullish momentum on the upside. So yeah, that's it for me. I hope you guys enjoyed this video. So just to sum up what I've said here, I don't see any divergence on Gamestop price action. I'm still bullish on the long term. I have no problem in my different scenarios to see a price action going back to 110. I would still be bullish because I don't see these divergences. And I think actually it could be a good thing to get back some liquidity sitting at these levels and helping the price action to be very impulsive on the upside to actually trigger this bullish momentum that is hidden on the call options we have on this very high strikes, thanks to the gamma those options have. So if you enjoyed this video, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.